What's up, everyone? Welcome to Money Market Truth, the place where you get informed and educated. And today, of course, we're giving a cash giveaway. This is our 10th episode, and we're doing this live. So hopefully people show up. But if you are brand new, make sure you subscribe. Click that bell button to get notified every single time we drop a video. And of course, click that thumbs up if you enjoyed this content. And if you're brand new, let me introduce myself. My name is Mark. I have my own YouTube channel called Trading with a Dummy, and I am 100% certified corny. And to my right is my co-host.
Hey guys, my name is Mo. For people that don't know me, I have a Discord and I trade options for a living.
Yes, so we have a formula that we're going to go through today. So the first thing we're going to get into is the breaking news.
This is Channels Television's breaking news.
All right, today's breaking news. The first thing that we're going to get into is TSM. If you guys have noticed that all the chip sectors have dropped significantly in the past couple of days. And today, a couple of hours ago, the world's largest semiconductor manufacturer, TSM, just announced that it is planning to build a $5 billion factory here in the US. Now, you would think that's exciting, but here's the thing. It's contingent based on the passing of the CHIPS bill, which was issued initially back in 2020. Now, if you're unfamiliar with what the CHIPS Act is, well, it's a bill that was passed by Congress for a proposed $52 billion to fund local domestic players to start manufacturing chips here in the United States. That way we don't have the supply chain issue that we've been having for the past couple of years. Now, we've actually seen a massive impact of this since 2020, once the pandemic started happening. And prior to that, we were actually having issues as well. Because TSM is actually in Taiwan, there's been issues here back and forth with China and Taiwan, which also has caused issues with getting the chips overseas. So this bill was supposed to give $52 billion to domestic chip makers so they can build factories, and that way we could build chips here. Now, for the average person may not even know this, but everything has chips. I don't know about y'all, but my refrigerator broke about a month ago and I could not find a refrigerator. I was going from store to store to store. It got to the point where I'm like, dude, like, what do you guys have available right now? And it didn't have anything. Everything was delayed a couple months out because of the chip issue, the chip shortage. Luckily, I did find one through Samsung. I ended up getting it delivered a couple of days later. But point being is that we have a massive chip issue. But this bill was specifically intended for American companies only. And of course, who end up actually passing this bill? Yes, love them, hate them. It was done during the Trump administration. He's the one who noticed that there was a supply issue and there was always issues with getting chips. So he wanted to manufacture chips here with American companies such as Intel. But here's the catch. Another thing, however, last year, there was the semiconductor industry urged Congress to start opening this up to all chip manufacturers. And that's why TSM is now into play. But you would think that since, you know, TSM is trying to move here and that Congress has the CHIPS Act bill that is actually funded. No, the bill still hasn't been funded. Hence the reason why things have kind of slowed down here in the United States as well. And that's why TSM said that it's based on the contingent if the bill actually gets funded. That being said, it's just for the fact that TSM can offset its costs on building its factories here. It's kind of messed up because if you think about it, all the different chip manufacturers out there, specifically Intel, is an American-based company. That's why I liked Intel. That's why I started investing into them, because they started actually building a chip manufacturing center here in the United States in Ohio. But just a couple of days ago, they actually also froze their building there. So they're not building it anymore right now. They put it on freeze because they also want to take advantage of the subsidy. If TSM is able to come in, foreign countries are able to come in and have the government pay them, they were like, you know what, we want a piece of that pie as well. So they actually stopped building their manufacturing center right now, and it's put on hold. So we'll see what happens. The thing is this is the crazy part, is that if you look at the grand scheme of things, when it comes, so it's going to be a little bit political here, y'all. it was $52 billion that needed to be funded, and it's been 2 years and it still hasn't been funded. Hence the reason why we have all these issues. And that's probably why you saw AMD go down, nvda go down, TSM went down just a little bit. All these chip companies have been going down. SMH, everyone's favorite ETF, is almost at $200 right now. That's like a massive dip from the all-time high. Plus, of course, we're also in a bearish market. That being said, though, why do I think we haven't funded this yet? Well, we actually spent over $50 billion we gave to Ukraine, just shipped it over there. Now, of course, I don't know if that's part of the money, if that's the reason why they haven't funded this yet, but we have spent money at Ukraine. Just literally dropped, I think it was about $58 billion we gave to Ukraine for weapons and food supplies and etc. And the midterms are coming up, and unfortunately, the semiconductor is really not on their priority right now. So I'm not sure if this is going to get passed or not. I know there's a lot of people right now coming forward, business analysts, people who work in the government, saying that, hey, you guys need to fulfill this bill right now, because if not, all these deals like TSM and all these other countries that are trying to come over here and build factories, they might pull their deal off the table, and then we're going to be stuck in another situation like we are right now, and it could get worse. Speaking of that, that's why also I think potentially like Tesla, for example, they just laid off over 200 employees and also closed out one of their factories in Cali. What's your thoughts on that, Mo?
I think you bring a good point. I just want to mention one thing. The reason why they're not really paying too much attention to funding the chips is the government realized a long time ago, in order for them to fix the supply issue, they're going to have to make some investment. However, it's easier for them to fix the demand issue, because in order for them to fix the demand issue, they just need to increase the penalties. So increase the interest rate, right? Increase the luxury tax. So I don't know if you know that. I'll just use Canada as an example. If you buy a car over $55,000, there's the GST is 15%. Effective September 1st, if you're buying a car over 100K, they're putting another 10% tax on it. So they're trying to curb the demand. So what's better, to penalize people for buying or to fund companies and support them? That's one thing. Second thing, and this is going to get worse, and this is working in what the government wants. If you were a car manufacturer and you wanted to order a chip right now, the wait time is 20 weeks. And
it's crazy.
As you may know, if you want to order a brand new Range Rover or Mercedes, you order and then they start making. They don't have cars sitting in the inventory. That's how it works now. So imagine you ordering, then the order going to the plant, then they order the chip. So all this is causing a supply issue, which they're fine with, because now they're trying to fix the demand end.
Yeah, and I definitely see the chips still having a hurdle to go through when it comes to fixing this whole issue. So I'm seeing that these stocks may continue to go down a little bit. So we'll see. I mean, AMD literally is at $76 today, dropped like almost 10% in 2 days. So it's pretty crazy. But yeah, so let's move on to the next subject, which is going to be how to navigate the market in a recession.
You just pay attention, you might just learn something here.
Go for it, Mo.
Okay, so couple of things you have to understand, and I had this conversation with a couple of people in the Discord. Now, technical indicators are great, right? You can pick anything. You can pick moving averages, supply and demand. They all work, right? If you specialize in one, just use that. But if you don't understand the structure of the market, you're not going to get away from making money, because like, look at a day like today. Supply and demand wouldn't have helped you. Let me just pull my chart real quick. Okay. All right, are you able to see the screen? Perfect.
Yep.
So today was a day where I'm gonna pick SPX here, where if you look at the range, this is where the market opened. We opened at 37.98, and the high of the day was 38.36, and this is literally what we did. And the reason why a lot of people lose money in this market is because you'll find a supply or support somewhere here, it breaks, you get into calls, and it's a fake out. Then you get somewhere here where if you're using support and resistance, this breaks and you get into puts and you get this immediate bounce. Then if you look at a move like this, where you're like, okay, you know what, I'm going to get into calls. You get into calls, you're up 30-40%, you get one red candle, and instead of being up 30, you're now down 40-50%. And the reason for this happening is two. One is we're chopping because the market had such a big move yesterday that the market is actually absorbing that, right? RSI is cooling off. And so what you need to understand is anytime you have a trend day, and a trend day is where market just rips or goes down, the next day, be careful. Understand the structure. And what you could do to understand is wait for an hour to see where the top and the bottom are forming and play around that. I don't want to use the word counter trending, but that's literally what you want to do it. Once it hits the supply, you want to start adding puts. Once it gets to demand, you want to start adding calls. So your range trading. One of the best indicators for that is Bollinger Band, which I've covered in episode 4, so you can go back. Second thing you need to understand is what's happening. Why are we going up? Why are we going down? So first thing you need to understand is charts, market are not equal to the economy. If the economy is going down, that doesn't mean the market will go down and vice versa. Market is separate. Second thing, and this question a lot of people are not clear with, can buying options or selling options move the price of the stock? A lot of people will like, no, you need to buy stocks to move stocks. The answer is no. Buying and selling options can actually impact the price of stock. And it's done through something called gamma. And I'll explain you. Let's say Mark here is a market maker. And Mark's job is to balance the house. It's kind of like he's the dealer at the house, right? His job is not to make money or do directional bets. His job is to make sure he's neutral, meaning he's always balanced at all times. Me, I'm a fund. Let's say I'm Goldman Sachs. I come in buying, let's say 24,000 puts. Now, my puts go out the money, so I'm losing value. Now, because I have a lot of puts, and the entirety of the reason why I have those puts is so I can hedge my long position. Now, what I'll do next is because my puts are going out the money, I will sell them, and I have two options. I can either roll them, meaning I can get something closer to the money, or I can buy more time. So when they start selling it, it's done into two steps. First, they sell it, and then they add. The adding doesn't have to be done on the same day or even the same week. But what happens is when they start selling these puts because they're out the money, they're losing value, the market maker, meaning Mark, has to buy back stocks to balance, to stay delta, which causes a rip in the market. If the market is going down for several days or weeks, like we saw 7 weeks of straight down movement. What ends up happening is people who had these big in the money puts funds, they start taking profits. When they start taking profits, what you see on the system is they're closing it. And because they're closing it, the market starts ripping because Mark is now buying back those stocks to stay delta neutral. No matter what indicator you use, if you don't understand the structure of the market, you're going to have issues. So you don't have to get into macro, understand bonds or anything like that, but just be patient. In the next segment, we're going to talk about how to pick option chains, and that's also going to be tied to the Greeks, and we'll go over that. But Mark, do you want to add anything to this?
No, man. 100%. Just be careful when you guys are out there and you are trading. So again, this is just some advice from a guy who does it full time. So I don't trade options full time. I'm more in the futures market. So again, if you're brand new here, this is literally what Mo does. He is verified. Again, if you guys are not familiar with my channel, I double check on a lot of these traders. He 100% is accurate. So, but yeah, man, that's a bunch of good information. So you guys keep that in mind. Now we got a few people in the room. I know what you guys are here for. So while I'm doing this, Mo, if you want to go get up the other chart, let's go get that money.
All right, give me the money.
All right, y'all, do me a favor. If you get a chance right now, I need you guys to go ahead and throw your Cash App in the room. We're going to pick one person to give $25 to right now. So go for it. Throw your Cash App in there. I have a number in mind, which I wrote right down here. And if that person drops it, then that individual's going to get it. So there's a number that I have in mind. Go ahead, drop it, y'all. You have 30 seconds. Go for it. 30 seconds. Drop it in there. All right. So it's not too late. I wrote down a number. This is going to be the person who's going to get the cash out. The third person who wrote, I don't know if you can see it. The third person who wrote their name in the chat. All right, let me open up the chat real quick to see who the third person was that threw his cash app in there. So hold on, 1, 2, 3, Janice Arlene. So Janice Arlene, that was the third person to throw their cash app in there. I'm going to drop it in here right now live, so you know that we ain't about that BS. 100% gonna drop it. So here we go. I'm putting in your cash app right now. Janice. We still have one more $25 that we're going to give away here closer to the end, so stay tuned. Tell people about this. Join in if you would like to. So hashtag Janice, I think I got you right here. A1. Janice, are you sure this is your cash app? Janice A1, because I got that in there, but that's not the one showing up at all. So, yeah, Janice, are you sure that's your cash app? Just want to make sure. Maybe I'm writing it wrong. JANICE.
Did you have the dollar sign?
I did put a dollar sign there. But yeah, she's not showing up. Give me a, yeah. Here, Jay, is it A11? Because this is what's showing up for you guys. Damn, take a look. I don't know if you can see it right here. If that's not the person, well, there's a, yeah, it's not it. Janice, figure it out.
Are you putting JA or JO? Her name is Janice, or I don't know.
Yeah, JANICE.
No, JO. It's JO.
Oh, JO. That's my fault. My bad. That is my dummy. There you go, J1. JO. Nah, Mo, I'm not seeing it.
Okay, so it's dollar sign JO.
Oh, hold on. There you go. Hold on. There you go. I think I got it. There you go. Got it. All right. Sending it to you right now. Hey, put a 1 in the chat when you receive it, please. That way I know you got it. It's going through. It was sent. There you go. Enjoy. Nope. I see Cedric Gilles. I counted on our chat. We have the first person that dropped their name in there was Dan C, then Kivo, then Janice is what's showing up on our end. So put a 1. She got it. Perfect. All right, let's continue. All right, the next thing that we're going to go over here. Don't worry, guys. There's still going to be one more that we're going to give away. So just stay tuned. All right, the next thing, get your pen and paper because it's going to show you some option chain stuff.
Write it down and keep it for future reference.
All right, Mo, you got your thing up. There we go.
Yeah, okay, so let's talk about option chains. Now, I know most people have done courses where you've done your study on how do you figure out Greeks and stuff. The thing is, when you're actually trading, it doesn't matter what the theory or what the definition is. You need to know in the next 20-30 seconds, especially when you're day trading or you're scalping, what the delta is, what the gamma is, what the theta is. So like 20-30 seconds, market opens, or you're scalping, let's say QCOM had a news, you need to know what chain to pick. It needs to be fast. So first thing I want to talk about is I'm going to quickly go over the definition. If you don't know, go over it. If you do, it doesn't really matter because I'm going to go over what they actually mean. Give me 1 sec. So delta measures the degree to which an option is exposed to shift in price of the underlying asset. So let's say a delta, let's go over an example of shop. We're looking at shop Greeks, right? So shop 35 call, delta is 23, which means every time the stock goes up by $1, your premium goes up by 23, right? That's how simple it should be, by 23 cents. So every time it moves by $1, your premium moves up by 23 cents. It also means that there's a 23% chance that this will go in the money. So one thing you want to keep in mind for delta is that you don't want to go anything over 20. Anything over 20, especially on weeklies, the theta is going to get heavier. So that's delta, simple. you know what, just look at the number. 2023 is what I look for. I don't go lower. There was a time when I used to go really out the money, but that time was 2020 and it was an anomaly. In this market, you don't want to do it. Again, if you're playing SPY, you got to be even more close to the money because, again, you're playing 0 day or 1 day out, 2 day out. The second one that you want to look at is theta. Theta refers to the rate of decline in the value of an option over time. So you don't want to get lost in the definition, but just look at it simply. What is theta? Theta here is -20. What does that mean? Every day the stock or the option, if nothing changes, it loses 20 cents off of its premium. So simple. One of the rules I have is after Wednesday, I don't ever swing weeklies. For new people, I tell them after Tuesday, don't swing weeklies, maybe add an extra week if you need to. So those are the two that I watch. The next one I want to talk about is implied volatility. Implied volatility is it uses an option price to determine and calculate what the current market is talking about. A IV just means how much the stock is capable of going up and down. A lot of people will get hyped and get into stocks without realizing what the IV is. This is probably the biggest one because what happens is high IV means you're paying a lot for something to get in. And so a lot of people sometimes complain, hey Mo, I don't understand, why am I down? The stock's actually up or the stock is sideways. The reason why you're up is because IV dropped. Usually IVs are up because there's an event that's happening. It could be earnings, and that's why I picked Shop. Let me show you the IV on Shop. Give me 1 second. All right, here you go. So the implied volatility is 100% 97. I wouldn't touch this chain at all. Like you want to get into stuff when it's 30, 50, 70%, unless you're playing a meme stock and a pump and that you need to be in and out. So let me show you guys something. The 35 call is what I had my eyes on today, and the IV on this is 100%, right? And the premium is 35. Let me show you the stock. But before that, I'm going to print the premium price of this. So what I'm going to do here is I'm going to show you how the chart of did for the premiums today. So the chart actually opened at $1.21 or actually opened up at 95 and it basically went down 30. So you'd be down roughly 80% on this, okay? And are you able to see the chart? Perfect. Okay, so I'm going to minimize this for a second here. And let me pull the Shop chart. So tell me, what does Shop do today? It didn't do anything. And because it didn't do anything and the IV was so high, Theta basically supported the high IV and ate up all your premium. Usually when you see something like that, you want to stay away from it because of two things. You overpaid. Simple. Second, today is Wednesday. So if it doesn't do anything, your theta is getting bigger and bigger because it's just eating up the premium. The last thing I want to talk about, which I think we should go over because a lot of people don't understand it. Hold on. So we're back on the basic. So volume and OI aren't the same, okay? Volume, let me give you an example. Mark buys 10 contracts of 35 Shop and Mark sells them at the end of the day. The OI will show 0, but the volume will show 20. So it basically calculates the total amount of contracts traded. Every single day, volume will reset itself to 0, but the OI stays there. Now, the reason why this is important to know is because you need to know if the chains that you're trading are liquid or not. Anything under 1,500 or 1,000 at the most, I don't trade because you don't know if there's a shark that in there. They pull their chain, and next thing you know, you can't get out of the contract. Another way to know if a chain is liquid or not is looking at spread. So this one is 55 to 65, which I again don't like. That's a 10-cent difference. That's too big. Let me show you a tight spread quickly. So this is SPY. This will be the best. Again, hold on. This is showing 0 day. So look at the spread here. It's a 2 cent different. And this is the money that market maker makes for letting you do this transaction. So that's this. And then the last thing I want to talk about is a lot of people are budgeting the play based on how much money they have. So a lot of people like, yo, Mo, I only have $200, but I want to play Tesla. Can I get this chain? No, you can't get this chain. If the chain is too out the money and it's Wednesday or Thursday, you're better off not playing it. Or if you want to play Tesla, play Lucid instead. If you want to play Google, play Amazon instead. Find something that's cheaper, but don't just go out the money just so you can get another ticker. And the last thing, if you see a sweep come in for, let's say, Tesla $800, buying a call for Tesla 820 is not the same thing. You have to understand everyone's going to follow the whale. So the premium for only that chain will get pumped, and it will hold very nicely because those whales are there to hold, right? They're not there to scalp with 4 or 5 million. So if you get the 820 or 810, you're not in the same play. Options have a different life, and sometimes options and stocks are disconnected. Stock will go up, and the options will go down, and that's the name of the game, and it's because of Greeks. But that's it for me, Mark. If you want to add something, you can.
I have absolutely nothing to add right now, but we're about to get into the price targets that I have set. This is for all the investors out there. So like I said, Mo is the trader. I'm more on the investing side. I'm pretty familiar when it comes to price targets. They seem to hit pretty well, the ones where I lay out. So I'm going to cover some of the ones that people asked me to cover on Instagram. We put out a poll there. So make sure you guys those look out, because on our videos on a weekly basis, we give you guys price targets. All you have to do is just tell us which ticker symbol you're interested in, and I will cover it. So without further ado, let me hurry up here and just get the crystal ball, because this is the only way for you to be able to actually get the price target, y'all. The crystal ball, this is it. You don't have to intellect to be able to get it yourself. Now I'm messing with you guys. Let me stop. It's really easy. It is supply and demand. So I'm going to pull up the chart right now so you guys can see it. Let me make it full screen. So the first one that people ask me to cover is Coinbase. Why? I don't know why. The company is literally trash. They asked me where is a good area to buy it at. Again, I'm not a financial advisor, so this is just advice. This is purely working off of supply and demand. There's no paywall. You don't have to pay me to get these prices. I'm literally telling you how you can get them yourself. You do not need to pay anyone out there to get these price targets. You don't need to join a club or anything like that. Literally every week I will cover certain tickers. Just DM me either on Money Market Truth on Instagram, or you can do it on my personal one, which is Trading with a Dummy. Now, Coinbase, obviously, if you can see, I mean, it IPO'd and it literally has been, it had a run up and then it's been going down ever since November 2021. So the reason why I can't give you a defined demand level here is because it doesn't really have one. It's broken below all of theirs. So it's currently at where's that, 45.57. So there's really no level here. It looks like it created a support level. So I put the support level here, which is 45.57. But if you look at the 52-week low in situations like this, if I was to get into this company because I really want to be in Coinbase for some reason, I would look at the 52-week low, and that's where I would start scaling in. I wouldn't buy at the high. I wouldn't buy. I mean, it's what actually I think is right after hours is now 49.78. I mean, it's close to it, but I would definitely wait. We're still in a bearish territory. Crypto's tanking, so this could honestly drop further. It could literally go to $20. It could go to $15. But in a situation like this where that doesn't have an actual foundation base for the supply and demand, I would just look for the 52-week low and start scaling in there. But I would be very, very careful with Coinbase because I honestly I think it's trash. The next one was nvda. So if you look here, I did a weekly and a monthly demand. So the bigger the time frame, the better price you can eventually obtain. But on a weekly level, I have $136 to $146. That's a good starting point to start scaling in my opinion. That's where I'm going to start scaling because I do like NVIDIA. Again, I know there's issues. We talked about it earlier today about TSM and what's going on with the chip sector. But I would definitely scale in at between 136, 146. I typically like to wait for the bottom of the demand level. So I would buy a few shares there. Now, There's a key level here at 124.34 that I saw, which seems to be a support level. I will probably buy some shares there as well. And then on a monthly time frame, though, nvidia could go between 114.91 and 136. So again, monthly time frame I probably prefer over the weekly one. But again, I have no problem scaling in, so don't invest what you cannot afford for it to drop and lose. The next one they asked me was Lucid Motors. Man, this one was a roller coaster, if you guys remember. I mean, it had some really highs, and then it just kind of tanked again. This one also started going down as of November. And what I have here is a weekly demand is what I found. I didn't do the monthly because really, if you look at the monthly chart, it's kind of hard to determine where the demand level is. But, you know, there's a support level there. But I did it on the weekly. And on the weekly, I would say it's between the bottom of the demand zone is $15.28. The high is $17. That would be the range that you would want to buy at if you really want to get into Lucid. But Lucid is another one of those companies, brand new companies that's very volatile. It is literally dumped like way past 50% of what it's valued as at. So be careful with that one. Next one was Microsoft. Everyone's interested in Microsoft. I am as well. So for Microsoft, on a monthly demand, I have $238 to $253. That's the monthly demand. Again, I didn't do the weekly on this one because this is a more established stock, so you can go into monthlies and focus on that. So this is the area where I will start buying shares in. Again, 238 is the bottom of the demand zone. 253 is the top of the demand zone. I'll wait until it reaches into that area. As you can see, it actually did back earlier this month. It went all the way down close to $240 and it bounced back up and went up, and now it's back on a downtrend. If it breaks the demand zone here, I don't think these demand zones will hold. I think the next one will be between $196 and $213. So that's where I would be very comfortable buying a lot more shares at. Next one is Amazon. I get that a lot. I keep arguing with the guy at my job about this one, but I definitely think it's going to happen. It keeps touching the top of this freaking demand zone, which is like it gets really close. I have the top of the demand zone $100, the bottom $88. That's where we feel comfortable buying at. Preferably $88 is where I would like to buy at. So in the 80s is where I will start adding to my positions. And then Google. People ask me about Google. This is a little extreme. A 1682 to 1775. I know it seems crazy. If you go to a weekly, there are some demand zones on the weekly level. If you pull back, there's a few here. There's one here at 2542. Just knowing what's happening right now with the market, I prefer to look at the monthly, and I would enter at the monthly if I was you. I know they're possibly coming up with a split here shortly. And historically, when a company splits, you know, it may have a run up the week prior, 2 weeks prior, 3 weeks prior. But then when it splits, it kind of starts tanking for a little bit before it starts running again. So I'm comfortable waiting for 1682 personally. Next one is they asked me about ChargePoint. If you guys are not familiar with ChargePoint, it's basically like a charging station for EV vehicles. They asked me what my thoughts on it is, as well as the demand zone. So the demand zone for this one is $8.32 to $11.83 on the weekly demand. I do not like this company. Look, I don't know if you guys have ever used ChargePoint before. If you have any EV vehicles that's not Tesla, because Tesla definitely has a monopoly when it comes to charging stations, but you can only use your Tesla on it, and the infrastructure is amazing. Like with ChargePoint, I don't know if you guys ever used one of those before. I can tell you it's a hit or miss. They're not maintained like Tesla. Sometimes you get there and they're not even working. So as a company, I do not like this one. As an investor, I do not like this one. And if you look, it's been literally on a downward trend since 2020. Now, it hasn't been profitable ever. So there's some key points that I wrote down for notes for the person who was interested in ChargePoint. So it hasn't been profitable. It had significant insider selling. I was looking at the insider selling. It had 1.7 million shares sold within the last 3 months. That's not a good sign, y'all. And it doesn't have any dividends or PE ratio. So I like to invest in companies that have a dividend and at least a PE ratio. This one doesn't have neither. However, here's the positive side of things, right? It is forecasted a revenue growth per year of 36%, and does have enough cash right now to last for like a year. And overall, it's not in the worst shape. Their assets, both short-term and long-term, exceed their liabilities. So that's pretty good on the cash front. But overall, I do not like this. If you want to invest into it for long term, maybe, because as we know, a bunch of these vehicles are coming out here soon. Like all these EV vehicles, so things may change and they may focus on this a little bit more. But me personally, I don't like it right now. Invest in it, invest money into it that you are willing to lose and you're okay with it dropping. For example, I bought Matterport at $4. I bought 100 shares because I'm doing a cover calls, but I'm okay with losing $400. Don't invest your life savings in these. They're very risky, so be very careful. What's your thoughts on those, Mo?
I would say like everything you said is price wise, like it's fine technical wise, but if the companies go bankrupt, then support's at zero. So just be careful. Most of these companies are garbage. They're not like Lucid Motors an exception. They have a lot of cash to burn. ChargePoint, I don't know, like unless the government starts funding them, there's going to be a lot of competition. EV is another sector like weed where a lot of companies went nuts. Like I saw Tilray go from $400 to $80 in a day, and everyone was buying the dip because it was so cheap. So yeah, just be careful. And I like to think about the indexes first and then the stock. So the 200 moving average on a weekly chart for SPX is around 3,500. If that breaks, what are the next levels? What happens if SPX goes to 2,900? That's one.
Yeah.
And then the last thing I want to add is come up with an outrageous price for your favorite company. So let's say it's Microsoft. I know Mark likes Microsoft. And maybe the outrageous price for Mark is 175. I would quietly open a separate account, put 175 limit order, and forget about it. Because as much as I know how these things happen, once the pension funds start selling and people stop losses getting hit, this is going to happen so fast that in your head, you're not going to think about, let me buy the dip. You're going to think about, how do I cut my losses? And that's what these markets do to people. So if you have a favorite stock and like what Mark said, only invest what you can lose or hold for 10 years, have those prices feed in and don't even tell yourself, just have that fed in. So maybe coin is like $10, just throwing an example out there. 10 for like 1,000 shares. Let's say you want to put in 100K. Or sorry, 10K, you can. But yeah, that's for me buying these stocks.
Yeah, that was pretty much it, y'all. So I know you're still here. If you're tuned in, first of all, thank you guys. Again, we barely ever do live. This is our very first live because of our 10th episode. We're really excited. So we want to give a gift. So I know you guys are here for all right. So I'm writing down a number right now. Start putting your Cash App in. I'm writing down a number. Go for it. I'm going to give you guys 10 seconds. I'm not looking at the screen. As you guys can see, I wrote down the number. All right. I'm going to count 10 seconds. 1, 2, 3, 4, 5, and 6, 7, 8, 9, 10. The sixth one. Let's see. Who's number 6?
Bro, you're gonna have to redo it. Only 2 people.
Only 2 people put in. Hold on. Oh man. All right, I'm gonna do it again. You know what? Let me put up to 30 seconds here real quick, and then you guys go ahead and do it. That's funny. Hold on 1 second. Let's do 30 seconds. All right. Well, winner is, what was it, Tyrell Frederick? He's the one. So I'm going to drop $25 right now. Stay tuned so you know that I got it, because I don't want to like not send this to you guys. So TYRELLEFR. Dude, that's a long name, man. Got you. Sending $25 to you right now. Put a 1 in the chat if you received it. All right, it's going through. Send it to you, dude. Is it focused? Come on, focus. There you go. Let me know if you received it, man. That way I know you got it. Again, guys, everyone, thank you for tuning in. We do this on a weekly basis. Again, when we go live again, we probably will give another giveaway or potentially access to the Mo's Discord. So stay tuned. Once again, my name is Mark. You guys can find me on my own YouTube channel as well called Trading with the Dummy. And where can they find you, Mo?
Hey guys, find me on OTB Clubhouse on Instagram.
All right, guys. I appreciate you guys tuning in. And as always, be safe out in these crazy waters. Peace out, everybody.